Hi there, welcome to Kneppy Invest. One of the most exciting things that can happen to you as a shareholder of a company is when there is a takeover bid for that company. And the reason it can be exciting is usually the takeover bid is a share price or is at a share price significantly higher than the current share price of the company. So you'll have a fairly big sugar hit to your portfolio in that one day. But at the same time, it can be quite frustrating because this company you have bought into, particularly if you bought in because you think it's undervalued and you think this company will grow significantly over the next 5 years, it can be quite frustrating, particularly if you think the takeover bid price might be still undervaluing the company, particularly when you're looking down 5 years down the road. But it makes sense because as investors, we want to buy companies that we do think are undervalued. So there are going to be other companies out there who are doing the same thing. They're looking for undervalued companies that can buy at a cheap price. And that exact thing has happened to one of the companies I do own in my long-term portfolio. So before we get to that particular announcement, I just want to show you, if you haven't seen this is how I start every single day or every single trading day. After I take the dogs for a walk or a jog, I come back home and around about 8 to 8:30, I sit down and I have a look at all the announcements that have been released on the trading day. Now, not all the announcements, only particular sort of announcements. So how do I do this? You can go straight to the source, go to the ASX website. They do have a list of all the announcements, but they don't really have a filtering process. So I like to use CommSec for this because they do have a filter. Now, you don't have to trade through CommSec to use their platform. I don't trade through CommSec anymore, but I still use their platform. So this is their home page. And what I do, if you go to the quotes and research section here and go to the tools section, it'll bring up this individual company. And for me, it's Phoenix Resources. I don't know why this company pops up here. And I'm interested in company announcements. Now, this will bring up all the announcements released by the company every single day over the last week. And this company, Phoenix, has not released any announcements this week. But I'm not interested in company-specific announcements. I'm looking for ASX announcements. So easy trick here is to get rid of the Phoenix ticker code in the search bar, press go, and this will bring up all the announcements so far released today. Current time, it is 9:56 a.m. And this doesn't separate the announcements by market sensitive or non-market sensitive. I'm really only interested in price sensitive or market sensitive announcements. So if we click on this little filter option right here, it will break down or delete or get rid of all those non-price sensitive announcements. And all we're left with here are price sensitive announcements. And there are particular sort of announcements I am searching for. In particular, trading updates, profit downgrades, profit upgrades, half yearly or yearly results, those sort of things. And announcements start being released on the ASX around about 7:30, and these are New Zealand companies. And then Australian-based companies start releasing announcements between about 8 and 8:30. And then we just see a constant stream of announcements for the next, well, really for the rest of the trading day, particularly before trading begins. That's where we see the majority of announcements. And because I'm looking for particular announcements here, I quickly go through all these. I'm also looking for announcements that do affect companies that I don't own, that I'm thinking of buying in the future, also companies that I do own. And straight away, we see a few companies I am interested in. Perseus Mining, Walker Plan of arrangement completed. I'm not interested in that. We have one for bet makers, update agreements with the Waterhouse Group. I might look at that in the future, but no real need to look at that now. But straight away, there was an announcement here that really piqued my interest in regards to a takeover bid for one of the companies I do own in my portfolio, and that is mydeal.com.au. There is a takeover bid by Woolworths to acquire 80% of that company. Now, the most important thing here is what price that takeover bid is for. And all we have to do is open one of those announcements and we'll see the takeover bid offer. And somewhere in here, there should be a price. And actually, there's no price here at all. So we'll get rid of that one. Somewhere there should be a price set here. and I've gone to the mydeal.com one. Exactly same. Oh, here it is. For cash consideration of $1.05, which is significantly higher than the current share price of mydeal.com. And if we open up the mydeal.com page, their share price at the end of closing trading on the 19th of May was 64.5 cents. So a significant premium to mydeal.com's current valuation. Now we can see where even though the takeover offer is $1.05, the shares won't open or get near that because there will be still a bit of a risk that this takeover bid will fall through. So there will be a little bit of a gap between the takeover price and the price this trades at through the rest of the day. As we get closer and closer to the time where this takeover bid should be pushed through, that's when the share price might get to $1.05. So at this point in time, and this is about 15 seconds before trading begins on the ASX, mydeal.com.au looks like it's going to be opening at $1 and not $1.05, but $1.05. $1 exactly and 0.5 cents. So you just see this indicative price, $1.05, opening up 55.8 cents. So what do I do when I do see a takeover bid for one of the companies I do own in my portfolio? I sell almost immediately or a few days later, try to get as close as possible to the takeover price. Now, the reason I do that is because I've seen a lot of times these takeover bids fall through. I think there's less chance that this takeover bid falls through, but there's always that possibility. The other thing you got to think about also is there could be competition. So another player might enter the stage and have a higher takeover bid price, maybe $1.10, $1.15. That's a possibility also. But at this point in time, because this is a 55.8% premium at open right now, this is when I take my profits, sell this company, and hopefully there's not a bidding war for mydeal.com. Because we are at very close to open, we'll just I've already put in my sell bid for mydeal.com.au at $1.01. So we're very close to that. Maybe I should have just put it at $1. That way it would have definitely gone through. But you can see a lot of bids right now for this company. We have a million shares at 99 cents, million shares at 98 cents, a million shares at 97 cents. So what these investors are doing, they want to buy in at less than $1 and then sell out when this takeover bid goes through for $1.05. So there is a bit of a bit of an arbitrage here where they have a 5% greater return because of this potential takeover bid for mydeal.com.au. That's what they're hoping, but there is still a risk. I do know that Warren Buffett and Charlie Munger through Berkshire Hathaway actually do this sort of thing on occasion. They're doing that right now with that gaming company in the United States that is being bought out by Microsoft. There's a bit of an arbitrage situation there, but still there is a risk involved that this deal falls through. The directors of this company have suggested, well, shareholders don't do anything because I think what Woolworths have done is very smart. They've let their current directors, particularly the founder, keep 20% of the company and maintain running mydeal.com. It's a very interesting deal in my opinion, because this is not, so mydeal.com this is sort of a Kogan-like website where you can buy stuff, sort of online marketplace, that sort of thing. And it's very interesting that, in my opinion, that Woolworths have gone down this road, sort of diversifying. Haven't done a lot of research on Woolworths, so I just think they've sort of spun out Endeavour, but they've just mainly involved with supermarkets. That's their core business, and this is going against their core business, trying to diversify. But mydeal.com is a really small company, so it's not really going to impact Woolworths unless Woolworths has major plans for this business in the future. So I just want to see where mydeal.com actually opens up. Indicative price right now is $1.01. So that is 0.5 cent above the sell price I do have right now. So if it goes through, I'll be very happy if it goes through at these prices. Take my profits. I've also received notification from my super fund that I have a lot of cash in my super fund right now, and they're wondering if I mean to have a lot of cash in my super fund. and this will just build up my cash reserves in that fund right now. This is one of the things I do when the market is feeling fairly bearish, and definitely the markets are feeling fairly bearish right now. I do increase my cash on hand, so when I do see a bottom approaching, or even not approaching, if I do see good value out there, that's when I do start buying. And right now, we are starting to see possible really good value in some American companies, but still that bearishness remains, and it can still fall for a while. Now, particularly with the threat of recession, we have seen significant decrease in consumer activity, particularly in the discretionary space, and that will be leading to some significant drops in sales, particularly for retail companies. And that's why we're seeing significant drops in the share prices of Walmart, Target. We are starting to see Amazon pull back as well. So that could be something that could affect share prices. And not only those sort of companies, but we might see significant drops in share prices of those big players. Apple has moved into a downtrend. Their share price has moved into a downtrend. So really interesting going on right now. And that's why I try to build up my cash reserves during these periods to take advantage of value when I see it in the future. Now, there's a lot of people who suggest that you should always be fully invested. But when you're fully invested, you can't take advantage of these sort of certain situations. So what happens is when I see the markets rising in a bull run, I am fully invested. When I see a little bit of hesitation in the market, a little bit of bearishness, that's when I start increasing my cash on hand. I will never go fully to cash because I just don't know the future. So mydeal.com should be coming in right now. Here it is. So current share price opened at $1.01, which is exactly the price I sold my shares for. So I have now sold out of mydeal.com, locking in the profits, increasing my cash on hand in my super fund, and I'll look for opportunities to buy other companies in the future. If you have any questions about this particular deal between mydeal.com.au and Woolworths, I do find it a fascinating deal. I would not have thought that it would have been Woolworths who have bought out mydeal.com. But if you have any questions and a better understanding of why this deal had gone through, why Woolworths were keen in mydeal.com, I'd love to hear your thoughts. Otherwise, that's the end of this video. A bit of a ad hoc video. Wasn't really on my radar before I started looking at announcements today. So not sure how this video has worked at all. If you think this is a good video, you like more videos like this, just tell me in the comment section of this video. Otherwise, that's it for this video. Have a good day. Bye.